And I was on mute. I said, what's up, everyone? I was just sharing a bit about my weekend here. Just saying, back in my hometown right now, hanging out with my family a bit. And I hope everyone else had a good weekend. So I apologize that the stream setup is not what it usually is. No fancy bar at the bottom with the nice colors. But I hope the mic quality is okay. I hope the video quality is all right as well. This morning's stream, got a couple cool things to talk about. Oh, Jekka, thank you, but it's tomorrow, but I appreciate it. It's on the 6th. Happy early birthday to me. But yeah, a couple cool things to talk about today, everyone. Number one, little update on that SPY trade from last week. So, it wasn't really a trade that I had a ton of confidence in, but everyone was talking about SPY hitting 400 by the end of Friday, market close. So we structured out a risk reversal, right? So there's a really cool trade structure you can put on when there's a lot of put skew, right? Put skew is something you see on things like the S&P because everyone's coming to the S&P to hedge, right? So they're either selling calls on the S&P, driving down the implied vol on the call side, or they're buying puts, driving up the implied vol on the put side. So what we can do there is we can come in, sell some of the out of the money puts, and use that to finance out of the money calls, getting a really good trade on these ETFs. So we structured that out for Friday. If you did take it, it would have paid off huge. We did hit that 400 mark on Friday. Really cool. Congrats anyone who did it. And we actually see S&P ripping today as well. Right, up another 1.23%. Jekka, look what you've started, man. Guys, I appreciate the birthday wishes, but my birthday's actually tomorrow. I think Jekka had some bad information there. S&P ripping to all-time highs. What a year, guys. What a life. Look at this. You got to love it, right? You got to love it. So you could still do a risk reversal. You could do any of that stuff that you want. A few good trades there. I'm sorry, I don't have I'm on a MacBook Air right now. So if I opened up my brokerage as well as the terminal and the live stream, I think my computer would explode. So I'm not going to be able to show you the trade structures today, but we can definitely talk about them. If you have your own computer open, I can help walk you through how to do them. Yeah, I guess so. I'll still take the birthday wishes. It's all good. So today, S&P ripping to all-time highs. You can still do a risk reversal if you're still bullish on it, or you can buy the stock, right? I don't think I'd be buying a call on it. We priced it out last time. Like it might make money, but you can, once you define your view, you'll see that it's probably not the best trade to put on. There's probably a better way to get a better payoff if you are correct. Now, another interesting thing that I found, I was chatting with Jordan about this, is, the thing that happened with Bill Wang's, hedge fund, Archegos Capital. Don't know how to pronounce it. Doesn't really matter. But you know what happened there with them getting liquidated, all this leverage, huge crash in a whole basket of stocks, a lot of these Chinese companies. Well, it turns out, little plot twist here, another fund related to Bill Wang's fund is also losing a ton of money on names like GSX, right? So Tang Yu Partners was also involved. And it looks like now they're taking tons and tons of losses on names like GSX and Viacom. And that might be why we saw GSX take such a harder hit than the other companies. So remember, our trade idea for last week with TME, GSX, all these names was, now that the selling is over, we should see volatility come back down. But one that we didn't see volatility come back down on was GSX. Now, what we don't know is if this company, what are they called again? Tang Yu Partners is done liquidating. There may be selling pressure still coming in, forced liquidation coming in from this hedge fund, in which case vols would still be up, right? Now, or buying back, right? Like, so force liquidating here. And if that is the case, it might make sense why we see GSX vols through the roof still, slowly coming down now, which means, it still is a good trade probably, right? It still might be a great trade. And is the stock falling, or you mean the vols are falling, Rob? Right? Yeah, a lot of the guys, and we've talked about this a ton in predicting alpha. So I'm sure you guys have your positions. It was definitely the right move to still scale back on Friday, as Jordan talked about on the Thursday Night Live. I wasn't there for it, sorry I couldn't be there, guys, but I'm sure it's he went over it in depth and it made sense. Vol and stock, so stock's crashing as well. Wow, look at it getting smoked. Jeez. Yeah, so the trade here, you can sell some vol, right? I wouldn't be scaling up again, guys. You should still have an okay amount of size on this thing. We haven't scaled back in at all, Jordan or myself. We're still in it pretty big. We're happy with the trade that we have on there. Let's see. Now, so that's the trade there, right? You want to go out, you want to sell the 1 year vol. I think it was we're in like a 35 straddle, leaning a bit positive delta. But as those vols come down, it just starts to print. It's pretty cool. Between, synthetically through the fund and everything, I have a lot of capital in it. Yeah, synthetically, I guess. But in my own like personal thing that I mess around with, not huge, no. Does that answer your question, Jacka? So let's move on here. We have a couple of earnings, I believe. Jordan was helping me out with this. Let me just confirm. April 6th. Okay. Oh, is the RXT punt doing well? I haven't had my brokerage open at all today. Oh, this is so funny. No way. Look at this. It's printing. This is awesome. Just know, guys, predicting alpha, #1 signal service in the world. Harry, you were absolutely right, man. We need to rename predicting alpha into receiving alpha, because we're like the Oprah Winfrey of alpha. Look under your seat. Alpha for everyone. Everyone gets a free alpha. Harry's asking what the time horizon on the GSX trade is. Man, these things can drag on, right? If the edge is still there, we're going to hit it. You know what I mean? It's just the way it be. We would hope that it would come down this week. But as you see with if you go back and watch the live on the Tesla trade that we did a while ago, the thesis was really good, but it took a month and a bit to play out. Right? It took a while for it to play out. It's happened before with our silver trade last year, SLV. I think we were in that for like 2.5 months or something crazy. So as long as the edge is still there, we should still be in the trade. Right? It's not so much a time thing that we would say we were wrong. It would be like the stock increases in vol 15, 20 points. Then we would be wrong. Right? And if we held it for a month, we'd make a couple bucks, on our 10 cents of theta that we have on it. But I'm really happy about this RXT position. Super cool. The punt of the century, guys. I'm telling you, this thing's going to $35. All right, let's take a look at a couple of the earnings that we have. We have 2 earnings that we're going to talk about today. #1 is PayX. So PayX has earnings tomorrow morning. And the second one is going to be LNN. If you guys have a stock that you want me to just do a quick overview of, anything like that, feel free to just drop it in the comment box. More than happy to chat about it. So remember, when we're trading earnings here, what we are trying to do is we are trying to price the move around the event. All right. So what do we have here? Well, we have a company where currently the market is implying, right, earnings is tomorrow morning, and the market's implying a 3.6% move. Oh yeah, Rob, if you can drop me a few comments about what's going on with Root, I'll be happy to look at it. 3.6% move around the earnings is what the market is implying right now. So baked into the option price is a 3.6% move. So what we're able to do is come in, try and price that move. If the move's expensive, then we think the option's expensive. If the move's cheap, we think the option's cheap, right? So what can we use to compare to this 3.6% implied move to decide our option's cheap or expensive? Well, we could start by saying, what does this thing do on average, right? This thing is not a new company. We have lots of earnings events to look at. And we can see that on average, on Big C. Okay, Rob and Derek, drop me a few comments about what your view is on the trade, what you think is happening, right? Do like a little trade analysis for me in there, so I have a good idea of what you guys are thinking. You can see here, implied move 3.6%, average move 1.96. So what we can derive from this is that on average, the market overstates the size of the move by about 1.6%, okay? You guys, you notice how I'm on the ball this morning? Got my coffee. We're all set. So that's one measure where we can start to indicate, okay, maybe this thing's a little bit expensive. Now, one thing that I don't like is the implied move is pretty small here, right? It's not like we're talking about, it's not like it's implying a 10% move and on average it sees 7%. We're talking about a 3.6% move versus a 2% move. It's not huge numbers here. Let's see how big this company is. It's only a $36 billion company. It's not like the world's biggest company either. So seeing a move bigger than that might be possible, right? It's moving 1.4% today, for example. So that's one thing, right? So one benefit is the implied move is a lot bigger than the average move. But one downside is the implied move is not very large to begin with. We look at what the average implied move is. This can give us an idea, right? Maybe this is just the way it is, right? It doesn't move much around earnings. And we can see that the average implied move is 4%, more or less, 3.9%. So we're pretty much in line with it, 3.6%, 3.9%. This earnings season, we've seen vols come down a little bit from the average move. Things look in line. Let's see here. One thing we can also look at is what is the individual implied move sizes per event? The reason why this could be interesting is, maybe there's like one or two events where there was a ton of volatility implied and it's skewing our data in some way, right? If we're taking the average of a data set, right, and we have like 5 numbers, let's say we're taking the mean of 5 numbers and the numbers are 1, 1, 1, 1, and 1 billion. Well, the average is going to be something around 200 million, right? It's basically 1 billion divided by 5, even though it's 4 ones and 1 billion, right? So let's see what we see here. We see that the average implied move is usually around 3%. And we have a couple of bigger events that do pull the implied vol level up. And then if we take a look at the move data, we can see that we usually get little to no move. And we have a couple of events that were blowouts where it moved about 4 or 5%, right? 2 times it moved between 4 and 5% here. We can see that Q1, it's not usually a huge mover. So even though this is a really low implied move, it might still be worth selling some vol here, right? Another thing we can point to is take a look at this straddle P&L. Negative 1.36 over the last 4 years of earnings, right? Or, sorry, 3 years of earnings. In the new terminal, we're going to have 4 years of data in there. So we can see that, wait a minute, it looks like selling vol is just really profitable here. It's never had this blowout that really, really hurt. Now, that's not to say that it couldn't, but it hasn't. And it hasn't. I also noticed that there's a little bit of a put profitability here, especially recently. A lot of move to the downside. Not really enough to make a clear case for it. But with this put skew we have on the stock as well, if you wanted to structure a directional bet, you could probably get some leverage going here. You did a nice little trade on, right? If Eric M is on the live, I'm sure he's licking his lips right now. So my analysis here, short some vol, right? Size it appropriately. Don't go big on this thing. But looking at it, it looks like the market historically overprices the volatility, even though there's not a huge move implied. Right, so we could come in here, short the vol. I would probably, you'd really want to be careful about how much you're paying for the wings on this thing. Also be careful about what your max loss is. I'd stress this thing to a 10, 12% move even, right? It's, maybe look a little bit more historically, see if there's ever been a big move, maybe in the last 4 years. I wouldn't look too much further beyond that. But that's what I'm thinking. That's what I'm thinking for this stock. We got one more here, and then we're going to jump into your recommendations, guys. We got LNN that we're going to take a look at. Oh, and apparently we do not have it in the terminal. It's too small. I guess Jordan was just looking on investor relations or something. Okay, we'll hop right into your trades. So first one is Root. Let's see what we're working with here. Roots Corp. I like Roots. Make good sweatpants and stuff. Okay. This is why is this the trade? What are we looking at here? Okay. Root trading at $11. Let's close out a couple of these windows. Getting a lot of lag going here. Stocks. Let's see what the stock's been doing. In the last 6 months, we're down quite a bit. Yeah, I know my computer's about to die, man. I don't know what I'm going to do here. Do I sound okay still? I hope it's not, too bad. Right, we can see that in the last little bit, we are down quite a bit. Do you know why the stock has got absolutely destroyed? Right, so stocks got absolutely crushed. A lot of upside risk being priced in here, though, guys. Right, huge short-term upside risk. So what's the trade idea here, right? There's a ton of call skew and the vol cone's pretty bid. Today on open, it's getting smoked and vol is dropping. There's research about it being undervalued and having a ton of short float. Okay, well, look, with the information you have there, Rob, it might just be worth buying some shares, right? If you don't really have too much of a view on, what's going to happen in the long term or how quickly things will happen, maybe pick up some shares, use a bit of margin if you want some leverage. Let's see. Man, I can't wait for us to have better news in the new terminal. And as Jack has said, new terminal next year, at least maybe by then. No, I have a call with Jordan to talk about the finishing touches on it today, actually, which means, couple months. All right, Volcone. Yeah, okay, vols are it's pretty pricey. You think they're the ones buying those calls, eh? Okay, well, I can't open up StockTwits right now or my computer literally will explode. So you're definitely going to want to take a look at that. How old is the stock here? Right, the stock is very young too, right? It's only been listed for 4 months. So what might be worth doing, you could structure a 1-3-2 fly into this, right? Because these guys are obviously betting on this thing shooting to the moon. But maybe you get a nice little trend up or something. So you could take a little punt there. But besides that, selling some of the longer dated vols might not be a bad idea, right? These like 6-month vols are super, super pricey. We're basically at the max here. Right? If you take a look at this, right, max at 129, 123 here. I'm thinking that's not a bad idea. Right, we just got that little pop here for a second, and then it came back. And that was when, like, maybe 2-3 weeks ago. Vols are looking pretty pricey here. I'm thinking this could be good for short vol. If Adam, I'll get to that as well. So yeah, Rob, I would say longer dated vols looking super pricey here in the short term. Maybe take advantage of some of this call skew. One reason that this might not be a bad idea is, in the end of the day, stocks trend up and then they crash down. So pricing in this upside risk, you want to really see why they're pricing this in. If it's just a company that people like, that's not really enough reason for us to be pricing it in. If they're looking at upcoming events or releases of some sort, well, let's think about why they should be pricing in upside risk, right? Something like NNOX, right? FDA approval news shoots it to the upside, right? Because that's like a binary outcome where new information comes in and the market reprices. And there's a lot of uncertainty around these events. Now, if there was a lot of certainty around an FDA approval or something like that, there wouldn't be that big change. Key example, Pfizer. Remember last year when Pfizer was getting the approval, the emergency approval for their vaccine? We all knew they were going to get it. They got it. Stock actually dropped a couple points. So my point is, it's more likely that this thing trends up without even looking at it, right? That's just the general consensus on how these stocks move. So go figure out why this upside risk is being priced in. If it's common knowledge or there's not very much risk around it, bet on it trending up. Structure a 132 fly, and maybe even come out here and sell some of this longer dated vol. It's super pricey, right? It's probably positive expectancy, unless you can think of why this thing will move like crazy in the long run. Remember, what we're trading there is the market's view, right? The view on the future, not the realized fall. So if you think if you think the market's going to calm down about this thing eventually, it's not a bad one to trade. Now, one thing to note is that this is not a very big stock. So it could be pumped, right? If this is really, really popular in the Wall Street bet space, things like that, you could see a pump here of some sort if, there's all the short interests, et cetera, which it seems like you think there is that potential, Rob. So I'd watch out for that. Right, that'll make the vols go through the roof. That could hurt. There's a little analysis on it. I would probably be off the bat looking to sell vol or a 132 fly. Now, what else did we have on here? Thoughts on Big C. Vols looked pretty low on Big C. Looking at going long vol. Stock has dropped quite a bit. Big C. Stock has dropped quite a bit. All right, so something to note here, guys. When you're taking these long vol plays, if you're just looking at buying vol here, it's a tricky game. Long vol is a tricky game, right? I know most people do it off the bat. They're like, oh, I'll come in and I'll buy a call. I'll scalp a pip. I'll do whatever. The way to think about it, though, is when you're trading long vol, you need to think about what the market is not seeing. Markets are smart. They're pretty efficient. News that's out there, they are going to see. So you either have to disagree with them about the conclusions of that news. Maybe you think there's more risk than what the market's implying for the same news, or you have to find news that the market's not seeing. Right? So ask yourself, what's the market missing with Big C? That's the place you want to start. Right? We come in here, we look at Big C. And for sure, vols are at all-time lows here. Stock's also not that old, right? It's pretty young, right? It's just a stock from last year. It's one of those new stocks. We see vols get absolutely smoked, though, right? Absolutely smoked down to 69%. But what we also see here is it's not like vols have leveled off in any way. I haven't priced this thing on a fair value. How do we know that vols are cheap right now versus they were just expensive before? Right? They might have just been expensive before and now they're closer to a real fair value, in which case you don't want to be buying it. Right? So I would maybe try to see, is there similar companies? Can we price out the vols on them? but I don't know if I'd be buying this. Let me see what my long vol FNKO trade is doing right now. Nice. Nice. Look at this, guys. Can you believe? And I don't think anyone took it. I didn't take it. I don't think anyone I know did. So sad. Would have been the best gamma scalp of all time. God damn it. God damn it, guys. So yeah, big C. I don't know enough about it, man. But when I'm looking at this data, it looks like things are calming down. Vols are coming to a normal level. I'm not really seeing an opportunity to buy unless you think the market is missing something. In which case, then you would. Next up, we got NNOX. GME's doing a share offering, eh? Smart. Nice. Very cool. Very, very cool. Yeah, and Derek, like, don't get too frustrated about your long vol ideas. Long vol is an area where you can get extremely, extremely wealthy if you get good at it. But there's a reason for that. It's hard to be long vol. You're going against the risk premium. You're on average going to lose. You need to find the big winners, and doing that it's a whole other game of research in reality, right? You can try and play, some sort of like statistical game where you're trying to identify underpriced vol just based on the numbers. But the way that the real pros do it is they are like looking for things the market is missing, right? Think about the movie The Big Short. They were long vol in that movie, right? All the guys who made billions of dollars were long vol. But think about the work that went into it. They weren't just they started off looking at the numbers and went, something's weird here. But then they needed to understand, why does this look weird, right? What is wrong right now? What is the market missing? So they literally, remember they met the stripper, find out the stripper has 5 houses, keeps getting refinanced. They went and met with the dealer, giving people all, met with the brokers, right? Met with the people getting foreclosed on. They went above and beyond to really understand the situation. And that's what it takes to bet, to make it worth it to do a long vol trade. And obviously not all of us can do that, but we got to think outside the box sometimes, right? Because long vol is not a game where thinking inside the box is going to put you in a winning spot in the long run, right? Anyone gets lucky in the short term. We're trying to build strategies. We're trying to be winners here, right? Ko is asking, what's a good gamma scalp? Well, depending on what FNKO's at, that was pretty juicy. Balls are trading at 114. This might still be good. I would maybe do FNKO. I think it still looks good. So NNOX. Sorry about that, guys. I got distracted here. Let's see. What is this? Nano X skyrockets higher on big FDA milestone. Shares are surging Monday pre-market. It's up more than 60%. You're kidding me. Rob, have you been gamma scalp? Oh, you haven't been gamma scalping it. You're just long vol, right? You're long a 132 fly, I think. Is that correct? Look at this. Good for them. Just got crushed though. You know how many people probably bought in right here at 63 bucks? Oh my God. Oh my God. What's your pin, Rob? And when does it expire? So what's the trade here? Let's see. FDA approvals. IV's still pretty big. High with call skew in the last 10-day options. Good time to short some vol with a bit of positive delta. So Harry, I would say no. I wouldn't short vol here yet. The reason is because the stock is realizing a lot of volatility. Remember, volatility clusters. If today's move was 10%, the most likely move tomorrow is also 10%. And we've also done a lot of research, right? If you go and watch the video on YouTube called "Does Selling High IV Rank Work?" It's a video we made for some of the tasty traders out there, right? So you actually love this. You came up through the tasty trade system, right? Does selling high IV rank work? And what you see is actually selling low IV rank works better. The reason is because when realized volatility is high, implied volatility comes up. But what we also see is in times of high realized volatility, implied volatility underestimates the amount of volatility. Think about market crashes. Think about GME. Think about how much this thing's moved in the last 2 days, right? So think about that. Rob, let's chat about your fly in the group after. I've been thinking about them, man. I think trading them this far out, trading them 2 months out, or like 3 weeks out, it's just too far, man. It's too far because all the P&L is made in the end of the last little bit. If we want to go that far out, maybe doing like a vertical is better, something like that, or some sort of ratio, like a different type of ratio. But I like to trade these on the weekly. I think the weekly is the way to do them. So let me know what you found by doing it. You've been riding it out for quite a while. I would love to hear your thoughts, right? Because you end up it's like you get the price you want at the end of the first week, and you're like, oh my god, I got another week of this, and my P&L is like a 20% gainer. This is really annoying. Really good turnout on today's live, 20 viewers. I hope everyone's doing well. Anyone else have a stock that you'd want me to take a look at? Jenny, I see you're talking about AZN there. We can definitely chat about that. I've got a question coming in here from SV. So SV, your question is, how do you play an earnings IV run-up? Let's say Netflix. So there's a lot to this. All right, there's a lot. Swati, do you mind telling me a bit about what you're looking at for TSM? So SV, what you need to see is so you're not really playing the IV run up, right? The mistake that people make is they think, IV ramp, like simpler trading's IV ramp kind of thing. The thing about that is the market, right? If we think about the stock as, let's say, a timeline, right? Let's look at this like a timeline. All right. And let's say this timeline has, a couple days in it. On day one, it's implying a 2% move, 2% move, 2% move. And then let's say this day is an earnings day and it's a 10% move. On this day here, the implied volatility is going to be, let's say, 40. I don't know. I'm just making up these numbers. Okay. Let's say it's going to, or no, it'll be like 80 or 70. Okay. Let's say it's 70 on day one. All right. Now, let's say we move forward in time here. Okay. Now we're here. So we're on like day 3 or something. The implied volatility is going to be like 110. And the reason is this day is not here. And this day is not here, which means this 10% move implied on the earnings day is a bigger portion of the option, meaning the implied volatility that we see for that option is going to increase. But realistically, the option hasn't changed in value. Okay. So what do we actually want to do? The way you want to play an IV run-up, you actually want to play the implied move run-up. So let's say we're looking at that timeline again, and we see, these are the days. We have 2, 2, 2, and let's say 5, right? And here is the earnings event. Well, we want to look at this day and say, okay, maybe historically, what is the implied move on the earnings day? Maybe we see on earnings day, it implies an average move of like 10%. Okay. Average move, 10%. Well, what we could do is now we could come in here, we could buy on this day. And as we approach the earnings event, if this move number increases to 10%, we're going to make money because there is now more of a move being baked into the option. It's not just a surface level thing. It's like the option has actually become more expensive. So that's what you want to be doing. If you want to trade the earnings move or implied vol ramp IV run up into an earnings event, you want to be pricing the earnings move, right? Is it cheap right now? Is it expensive right now? Going into the event. And you want to find undervalued ones where the IV might increase going into the event. A few of our guys in the group used to trade this all the time. We used to have a forecast for it in the terminal. Forecast soon, guys. Forecast coming soon again. One day. We just wanted to do some tweaks to it. But we run a pretty lean team. Bigger fish to fry right now. But that's how you would do it. So let's see here. SV, I can try to do that for the next live. You might not have been here at the start, but I'm on a MacBook Air right now. I went to see my family for the weekend. I'm still back in my hometown, so I do not have the computing power to have that much stuff running on my computer right now. Let's see here. Swati saying TSM and then asking about directional butterflies. I'm in a butterfly for TSM. Even the stock went up, the premiums didn't budge. So, Swati, just because there's a lot of moving parts there, like how you structured your butterfly, what you were seeing, where your strikes are, things like that. Let's talk about that one in the group. All right. If you can go make a quick post right now or spend some time on it, share what you did, share what you were seeing, what your strikes were, maybe share a picture of it even. I would be happy to look at it with you. Yeah, and Harry, I definitely agree with you. Harry, I definitely agree with you. The thing is, it's still realizing vol. Now, if it stopped realizing vol, now we might have something to talk about, right? You want to also see like how much certainty is about what the future of this company looks like now, given the fact that they have this approval, right? Market prices uncertainty. That's implied volatility. If we imagine a stock's trading at $1 today, and tomorrow we know with certainty it'll be trading at $100, implied vol should actually be really low, and today's price should become $100. The stock should change in price, not the option necessarily. Like the IV will crush and the stock will reprice. You know what I mean? Because there's certainty. So let's see. We got one or two more. I got time for one or two more here. We got WKHS. Could you give a trade? Okay, so it went up until open, then went way down. Do you think it will keep going or pop back up? What's your thoughts? I lost about $100 today on options. Just curious if I should get our way. So weird. I have no idea. Right? And that's just the honest reality. Trading direction is a very tough game, right? Predicting tomorrow's stock price is a very tough game. You know, if your only view is that the stock is undervalued, you should be buying the stock, right? You know, options first and foremost, they're volatility products, right? So if you have no view on the size of move or the time in which moves is going to happen, you're probably using the wrong tool for the job. You know, like you can think of it like you know, you're trying to cut a piece of wood and you're smacking it with a hammer. It's like you might break the wood, but there's you could also use a saw. All right. So you might be using the wrong tool for the job. It's worth thinking about. And if you want leverage, use margin. You know, it doesn't need to be an option to give you leverage. It's not the first and foremost point of them, right? So just something to think about there. An easy way to answer this though, as well, weird, is if you didn't have the position on, would you take the trade again? Would you buy the position you have from yourself right now? If the answer is no, you should close it out. If the answer is yes, then you should hold the position. And if the answer is somewhere in the middle, maybe you scale down. So with that being said, I am going to wrap up the live. I got to say though, I really enjoyed the engagement today. SV, Weird Gamer, Harry, Swati, Koa, Rob, Derek, guys, Jenny, this was awesome. I really hope you enjoyed the live. I had a lot of fun on it. I think when we get this like engagement where we all get to chat more, I think it makes the live a lot more fun. And we're at 11:11 right now. So try to keep them to 30 minutes, but I have no problem going over time when they're this fun. So thanks a lot, everyone. This was awesome. And we will see you on tomorrow's live. All right. Take it easy, everyone.